The stock market is extremely vulnerable. A pin drops in the distance and the market makes a mess of itself. Even when the market has gone higher and higher, fundamentally, there has been no reason to support this. Even Warren the Insider Buffett said the worst reason to buy a stock is because the price is rising. Unfortunately, every time the Fed steps in at such a late time to calm the heat down, the market surely crashes. You came here for the truth. Let's look into this today. The Federal Reserve expected to hike rates. Perhaps when you're watching this video, that has already happened. But let's go in here. Take a nosedive right into this information. I want to talk about gold, Bitcoin. I got a whole bunch of stuff today. Number of Fed hikes by decade. What an interesting scenario. You look at the 60s and moving into the 70s, you'll see obviously 35 times, very high. But look in the last 10 years. You've seen two, and they have been such marginal rates. And that's not really taken into account at this time. But in the last 10 years, practically nothing has changed in the interest rates. Of course, if you factor in inflation, you get a different picture altogether. Fed tightening usually ends with a financial event. And there are many over the years, obviously. You'll see going back to 1915. They're just basically showing you that generally when the Federal Reserve increases interest rates, it follows by a crash. What I would note is that the Federal Reserve starts acting in these small increments. It happens every time. Very small increments, too small. It needs to heighten those interest rates at a faster pace and do so bigger rate jumps, but it never does. And as a result, we have the same problems over and over again. And you look at what had to happen. Interest rates had to climb all the way to 20% to get to where they needed to. And that shouldn't really need to happen, but that's just the way it is. All right, then you're looking at the 87 crash. You're looking at all these different things, and every single time, particularly since, let's say, 80s, it's just every single time. That's the way this works. And I would suggest to you that, once again, they are making the same mistakes. Interest rates taking too long to rise up, and when they do so in too small of an increment. It's a very, very big mistake, but shouldn't surprise anybody. This right here is showing the price-earnings ratio as well as long-term interest rates. So the red line, you know what happens, 1980, it spikes up, and ever since then it has been coming down. When you look at the price to earnings ratio, you find, a time frame, you may know of it. It's 1929, sort of a big event happened around that time. And you're seeing that the PE ratios are approximately the same yet again. 30 is way overvalued. Sure, we're not in the dot-com boom, but that was a whole different scenario altogether in relation to the PE ratios. It went to literally absurd. That doesn't even make any sense what had happened there. But the economy was more sound at that time. So it's not just, I'm going to look at the PE ratios to determine if the stocks will decline. No, that's one indicator. That is one, and it shows to everyone who's paying attention, stocks at this time are overvalued. Look at what's going on in India. We saw with the restrictions, capital controls that were taking place. A lot had changed. There was this understanding that gold would be limited and everything, but that was January's numbers. Look at February. India's February gold imports surged to 50 tons, up more than 82% from a year ago. People are rushing into gold right now in India. Pent-up jeweler demand, and as retail consumers ramped up purchases for weddings, and it goes on. The rise in imports by the world's second biggest consumer of the precious metal will support global prices that are trading near their highest level in 3.5 months, but could widen the country's trade deficit, and it goes on. This is important to note because obviously what you have in India being the second largest consumer is that a lot of gold is purchased by the individual. We're not talking about the central banks. We're not talking about investment companies and everything else. We're talking about people buying high carat gold. And that is a very, very big thing when you're talking about, tons and tons of it all at once. It's a big news. Looking at a chart with this here is really the reason I show you this. India gold physical premium to spot. Remember, you look at the spot price. What are you seeing? Well, you're not seeing the physical gold, although a lot of times you can just go into the bank or go into the precious metals dealer and you can get, gold is at, let's say, $1,000 an ounce, and you can get it for $1,020. And that's, let's say, a fair estimate usually. But there are these occasions, this in particular, they've circled it here in green, where the premium is dramatically higher. And what if it wasn't just, a few pennies higher? What if it became double? What if it was triple? You don't know what's going to happen. That's my point. So when people look at this price of precious metals, you really, really have to remember. And this is a lot of the times I don't like to read about this information where they say, gold, because of this and that or whatever, gold is going to reach this much per ounce and silver is going to reach this much per ounce, because you're talking about futures markets. You're not talking about physical metals. The price can go astronomical. It can hit the roof and break through and go beyond. And it's not necessarily because of the spot price, it's because of that premium. So I think it's important. I think it's great. I think it's bullish for gold, but I just don't like to see this kind of thing, this talk. I find it's a lot of times sort of a marketing ploy. Gold is going to go to $50,000 an ounce. Watch my video, buy gold from me, etc. Bitcoin and gold reached parity. This is very interesting. I've covered it here on the channel. As I'm sure you've been seeing, the price has been steadily rising on Bitcoin, and gold has remained relatively stable. And all I wanted to note here is that there is this symbolic connection here. I don't necessarily think that much will occur because of this convergence in the price of gold and Bitcoin, but I do think symbolically people will feel that, okay, Bitcoin is worth more than gold. So that's all I wanted to suggest by that. This is a river which I believe is in between, the sort of that France area to Spain area, and it is where, this, basically this green dye is floating in the river. People are freaking out. What do they come out and say? That don't worry, everything is just fine. It's just a test. Don't worry about it. It's totally safe. Yes, it's fluorescent green. Yes, it's probably going to kill you, but don't worry, it's non-toxic. And how many times do we have to hear this garbage coming out of the media, coming out of the government when they tell us that? I mean, were you around during 9/11 when they said the air was safe to breathe? Then they later had to come out and admit, oh yeah, unfortunately a lot of people died because of that. Dozens of students in one Minnesota school district were ordered out of their class because they failed to show their immunization, their vaccines. So they couldn't prove that they got all the vaccines they needed and they were kicked out. And this is the type of thing that happens all the time. I do believe as a parent, you should get the opt-out forms. Type in the name of your state or your province that you live in, maybe even the city's name, and then you type in opt-out vaccine form or a waiver, vaccine waiver. You need to do that. You need to fill that information out. And in most cases, you're fine after. Your kids are going to be able to go to the school. So don't believe what they say that it is mandatory. In most cases, it is not. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my book, The Money GPS, even more informative. You can look through this book, actually. If you go to Amazon, they have a look inside feature that will allow you to flip through the pages of the book and see if you like it. Take care.